You're listening to Beyond Insights, your go-to podcast for all things accounting, business, and technology.
From cybersecurity and AI innovations to sustainability and work-life balance, we've got you covered.
We host insightful guests from different backgrounds, industries, and locations all around the world.
From this diversity of thought, we aim to find solutions to some of our most pressing business problems.
Thank you for tuning in. Let's dive right in and go beyond insights.
Hi everyone, welcome to another episode of Beyond Insights. In case you haven't seen me before, I'm Alex Hoffman, and today I'm joined by Liz Noble. Liz is a co-director at Providence Financial Limited, chartered accountants. She's a 2022 BNI UK and Ireland Positive Attitude Award winner, 2022 Zero Community Impact winner, 2022 BizX Awards finalist, SHBC counselor, and she also works in family celebrancy. Thanks so much for joining us, Liz.
Thank you for inviting me.
Awesome. I thought maybe you can tell me a little bit about yourself and your background and a bit about Providence, just to get us started.
Yeah, sure. So, as you said, I'm a co-director at Providence. We're a firm of chartered accountants based in Surrey, England. We work with property investors, football clubs, businesses, groups of companies in a wide range of sectors.
Awesome. And our topic today really is about the football industry. I know you've worked with a number of football clubs. Can you tell me a little bit about this?
Yes, so the entry into the football industry came through a client of ours who is a property client, introduced us to his family who own a football club, and it's sort of snowballed from there. So fortunate introduction. And it's a really interesting sector to work with. It's quite specialised and lots of interest in that. I'm not really a football fan, I'm more of a rugby fan, but I did have experience of rugby club accounts beforehand, so I knew some of the nuances, certainly with VAT applying to sports clubs, and they're just as applicable to football clubs.
Makes sense. What does the kind of accounting or business structure look like for football clubs?
So the majority of UK football clubs operate as a limited company or as a PLC in the higher divisions. In the lower divisions and in sort of grassroots football, they'll operate as a CIC, a community interest company. And a community interest company is a special type of organisation that has some tax advantages. It's allowed to make have some trading profits, and those can be exempt from tax within certain limits. But the larger clubs, the division clubs within the English Football League are generally limited companies.
And in the time that you've been working with these clubs, what have you learned about the industry?
I've learned that it's multifaceted, that they can't rely on one source of income. They have a number of different streams of income. They have some challenges in the way in which they're financed. So there are restrictions put in place by the English Football League to try and make it a fair playing field, excuse the pun, for all clubs. So there are restrictions on how money is introduced to the business, for example. It can't always be treated as a loan. Sometimes it has to be treated as equity. There are restrictions on when transfers can happen with players, for example. There are transfer windows. And there are restrictions on the amount that can be used to transfer players, depending on the club's financial record at the time. So there's a lot of things to be taken into account rather than just buying and selling players. It's not that easy. It's actually quite complex.
Yeah, I think it's a lot more complex than most people probably looking just from the outside would imagine.
Yes, it's not a case of a club has a pot of money and it can spend it. It's got to have that pot of money, be compliant with the rules before it can start to go out and have a look at what's there, who they can bring in.
And what are some of the common challenges that you've seen that football clubs face?
One of the main ones is VAT treatment. So The actual playing activities are exempt from VAT, but other activities that the club may have, such as hospitality, is subject to VAT. So there's a huge partial exemption problem for football clubs. So their grant income, for example, is outside the scope of VAT, so exempt from VAT. And that causes problems with the amount that they can recover in terms of their VAT on their purchases. So it's quite difficult to manage that across a season, because at the start of the year there'll be some grants coming in, there'll be transfer windows, in the summer and in January, and those are big chunks of income. So those can affect the partial exemption criteria and proportions. But later on in the season, you'll have you'll have the residue of the ticket sales. You'll have league tickets, season ticket sales at the start of the financial year as well. So you tend to get the bulk of the income coming in at the start of the year. You get a lot of expenditure towards the end of the year in the close season, when there aren't so many matches, pitch repairs are being done, expenditure may be done on the stand. So it's balancing the cash flows is some of one of the biggest challenges as well. So managing the cash flow, managing the VAT situation, having sufficient cash when you need it is critical as well.
Now, what kind of advice would you give businesses in this industry in terms of how they can manage that cash flow, how they can be prepared for times when there's less cash coming in? What general advice would you give them?
It's really important that they spend a lot of time modeling what the next season is going to look like, where they're expecting the cash flows, and using their past history and their past knowledge to identify when those peaks and troughs will happen, so that they can smooth things over. And then it's a case of making sure that they've got all of their expenses accounted for. So maybe having a different line for each type of expenditure, and within each division or each cost center, having a separate line for the type of cost there, so they can really pinpoint the expenditure by cost center against the expected income, and work out what their deficit's going to be, so that then they know what their financial requirement's going to be for the year, and they can budget accordingly. But it's a case then of having management accounts to measure against the budget, so that you can see whether you're underperforming against budget, overperforming against budget, and then you can flex the budget if you need to, providing there's additional finance to support that, or to see where expenditure needs to stop.
Yeah, it makes sense. It's all well and good to be planning for what you think the future year will be like, but then you do need to go and say, what did we actually spend? How much money actually came in? How can we adjust according to that?
Yeah, but it's doing that in real time, and it's having that real time information. So the bookkeeping is key to making sure on the Monday after a weekend match that you've got all your takings recorded, that you know what the expenses are going to be, what the payroll costs are going to be, for example, so that then how much surplus or deficit you made at that weekend match, so that you can see where you are against the budget. So it's constantly going back against budget. How are we doing? How are we doing? What can we cut? What can we, have we got to spend there? Is this expenditure necessary or not? Can we defer it? Can we avoid it altogether? Can we
So
bring
it's
other forms of
really,
income in?
yeah, it's really about constantly reviewing. It's not that this is like a once a year or twice a year exercise. You really need to be checking all the time.
It's a weekly task to see how are we doing against budget. Where are we at? Yeah.
And what do you think are some of the essential metrics that people working in the industry should be considering?
I think it's important that clubs know their break-even point. How much does it actually cost to open the ground before anybody actually comes in? What's that costing? And to set your prices accordingly. So you need to consider what your costings are. What's your overhead effectively per spectator? How many season tickets do you need to sell in order to cover that break-even point? Have you sold them? If you haven't sold them, then you're automatically got a problem, because you're not
Yes.
going to you're going to be operating at a loss. So it's knowing what those break-even costs are, knowing how much it costs to open the door is one of the essentials. It's then looking at how many home matches are you going to have in the season, because you're only generating income at your ground when you're playing at home. You will generate match fees and a share of the away take when you are playing away, but it's not going to be as much as being in your own ground with your shop, with your concessions and your hospitality.
Makes sense. And in terms of comparing accounting for football industry to some of the other industries that you've worked with, I know that you've worked with a lot of different industries. What are some of the differences that you've noticed?
Mainly, sort of in the disclosures. So normally with sort of a trading company, you're looking at minimizing tax liabilities. The majority of football clubs operate at a loss, so they're not in that situation where they're having to minimize tax liabilities. They're trying, cash is key for them, and the day-to-day operational management is key. So in terms of accounting, it's making sure you've got sufficient accurate financial information on a timely basis in order that the management, whether it's the operational management or board management, can make their key decisions based on actual insightful information. And that's actually where SIFT comes in, because it gives us that information.
Amazing. I was actually just going to say, if there are any softwares you use, obviously we love hearing about SIFT, but in general, yeah, the software that you use to keep track of that, like daily information or weekly updates, to make sure that you're really acting on timely information.
Yes, so it's important to get as much automation as possible into your processes so that there's minimal human intervention in processing information. So point of sale systems, so using things like Shopify, using link software between Shopify and Xero, like A2X, that can map the transactions coming in through the point of sale system into the accounting information. And then using the Xero integration with SIFT means that you can track back into Xero if you need to from your SIFT management accounts. But when it comes to preparing management information, the SIFT reporting is excellent, and we've been able to design reports that will save sort of 2.5 days a month in terms of preparing management accounts, because once the information feeds through, once you know it's reconciled, you've got your reports there. It's then just a case of you've prepared your management accounts. You don't need to spend time exporting into Excel and looking for the errors in the formulae, because it's all there. You can spend that time instead analyzing the figures. Does that look right? Does it feel right? What's underneath that transaction? Is something in the wrong place? If there's a huge variance, why is that variance? So you can drill down very easily by just sort of selecting the figure and get to the transactional level, so you can spot where something's gone wrong. But you can also use the AI in SIFT to generate commentary around those reports, and you can edit it, so it makes the whole process much easier. And then you can push the reports to the various cost center managers so that they've got their own budgeted reports, and you can add in and take out according to what's needed. So if you've got a cost center that doesn't have any revenue, you can just focus on the costs that cost center is reporting. But you can give various parts of the pack to the people that need to know about that part of the pack, but they don't need to know all the other information. So you can really be laser specific on the information you're giving and who you're giving it to.
Yeah, I think that's really important. Not everyone needs to be seeing all of the information. You just want someone who's responsible for, say, that particular division to be seeing the reports that are relating to what they can actually act on.
Yes. Yeah.
And how do you find using these different softwares has impacted your clients?
So it's really important to get the system set up correctly in the first place. So the mappings are key. And it's very easy to, if you're trying to do it yourself and you're not using someone who's experienced in this, it's very easy to get the mappings wrong. So
Right.
we've seen situations where the results in Shopify were not the same as the results in A2X, which weren't the same as the results in Xero. So the VAT, it impacted VAT, and it actually meant one of the clients was overpaying VAT. So we've managed to get that back for them, and we've corrected the mappings. So getting it mapped, making sure it's worked before you go too far down the line, so you don't have to track back over several years to find the errors is important. So implement, test, implement the next bit, test, and just make sure that you're getting the results that you expect from the data as you're putting those mappings in place. But using someone that's proficient in that implementation process is key to getting it right first time and not overpaying VAT and having to claim it back. It's nice to
Yeah,
get it
definitely.
back, but it's wrong to have paid it in the first place.
For sure. And I think that's an important thing that people always need to remember when it comes to technology. Yes, there are these amazing tools that can do a lot for you, but you do actually need to go and check that you've inputted the data correctly, that it's kind of what you expect it to be, that something hasn't been classified incorrectly. So there's still that human input. You can't just sort of leave it there and trust that
Yes,
everything's always going to be right. You
yes,
do need to check.
yeah. But whereas previously, the accounting team in a club or the accountant would spend their time preparing the accounts, and then here's the management pack without necessarily thinking about the figures. With the automations, you're not spending that inputting time, so you can spend more quality time looking at the results. So you can still spend the same amount of time, but you're getting better insight into the results. You're understanding what they're telling you. It's not just a mass of figures and here's a report, do what you want with it. It's actually, this is the report, this is what it's telling us. So you're adding more value, you're getting more out of just recording the figures. You're actually using the data that you're putting in.
Definitely. I know you mentioned one of the tools that you like to use quite a lot is the benchmarking feature. I wondered if you could talk a bit about that.
I love benchmarking. It's quite a lonely place being a business owner, and not just in a football club, but in any business sector. It's quite lonely. You don't necessarily know what your competition are doing. And the benchmarking facility within SIFT allows you to benchmark against the top 25% in your sector, the middle 50%, and the bottom 25%. And I think it's about 14 different key KPIs. So it looks at things like turnover, gross profit, profit per employee, for example, net profit, cash flow in terms of cash balances, debtors, creditors, number of days. And it allows you to compare yourself with other people in the same sector. So you can see where you're outperforming or where you're underperforming. And certainly in our practice, when we applied the SIFT benchmarking to our practice, we could see, our turnover's up, our gross profit's down. But then when you think the majority of accountants are one-man bands in the UK, then you wouldn't expect to see wages in the gross profit line because they're operating for themselves, and generally they're taking profit out at the end rather than at the beginning, immediately after turnover. So you can explain away those differentials, but it's really nice to see where you're at, and it's really nice to see how you are outperforming and where you could do better. And it certainly helped us sort of focus on our minds on, could we improve our operating profit? Could we improve our net profit? And yes, it's made us more conscious in terms of our overheads. Is it really necessary to spend money on X, Y, Z? And if it's not, then don't spend it.
Absolutely. And in terms of using the benchmark with football clubs, what has their kind of response been to seeing themselves compared to other clubs?
We haven't actually used it there at the moment.
Oh,
So
okay. That would be
so
interesting to know.
yeah, it's within the football clubs. The financial teams do talk to other financial teams. certainly
Okay,
in
so it's a bit different from the accounting community.
yes, yes. So they are quite a close-knit community. They are sort of sharing experiences and sharing sort of information with each other and sharing processes to try and get best practice. So yes, we haven't introduced the benchmarking there yet.
Okay, cool. Um, are there any other tools that you found that have been particularly helpful in this area? I know you spoke quite a bit about how helpful it is when tools integrate with each other and you're able to connect, for example, Shopify and
Mm,
A2X.
mm.
Are there any other tools that you found helpful?
Not specifically for us, but I know that there are ticketing and EPOS systems that use the open API, so can be linked. And I think open API is definitely the way to go, rather than having sort of custom made systems where, where possible, if there's an existing product that will do what you need it to do and it will connect, then as long as you've got someone that will help you with that connection and help you map any data that needs to be mapped, then you've got a ready-made, relatively cheap solution to whatever it is you're trying to do. But I think the more you can share through open APIs, you can get to the situation where you only have to input a piece of data once and it's read by all of the other softwares. So cutting down the number of times you have to enter data is going to give you efficiencies. So it's about looking for efficiencies in what you're doing. And there are, people out there that will come and look at your processes and see, are you doing things unnecessarily? And sometimes it's actually a good idea. We do this in our practice. We walk through a process. We actually put it on post-it notes on the wall, and we say, well, this is how I think it works. And then people say, oh no, we don't do that. We do it this way. So you put
Yes.
another post-it note up in place, and then you think, well, is that actually the best way of doing it? Are we doing something twice? Are we not doing something? Is there a gap? And then fill that gap. So sometimes just walking through, following a document through, or following a transaction all the way through, or following a route, any process within the organization, and mapping it can help you find some inefficiencies, and then you can resolve them.
I really like that with the post-it notes and comparing how different people are doing basically the same process. I think it's really great to be open to trying new ways of doing things. I know a
Mm.
lot of people get very stuck in one way, like I've always done it this way and it worked and it's fine. Like if it ain't broke, don't fix it. But I think that's exactly how you miss out on all these opportunities to improve your efficiencies, to make sure that you have that real-time data, that you can act on it. And so to, yeah, keep an open mind and listen to what other people are doing, I think is so important.
Absolutely. And if you can make a marginal improvement in a process and create a small efficiency, that's going to multiply. And you just look for the small improvements that you can make. And the more small improvements you can make, the bigger the multiple. So yes, I'm a big believer in the marginal gains approach.
Yeah, it makes a lot of sense. I suppose returning to our football clubs,
Hmm.
how do the kind of revenue streams function for football clubs? Do they make most of their revenue from ticket sales, from concessions? And if you can give a bit of insight
Yeah.
into that.
So football clubs will have multiple streams of income. So firstly, they'll have awards for success. So if they beat other teams and end up higher up in the
Okay.
league, they'll get success fees. If they're being televised, there'll be television fees and broadcasting fees, and income from that. There'll be grants as well. So if they're running academies, there'll be grants to support the academy and training opportunities and apprenticeship opportunities. There'll be transfer fees, so a player moving from your club to another club. They're especially beneficial if they've got homegrown talent that they've nurtured through their academy. So they've basically had a player that's sort of started off with a nil value, but has grown, has developed and matured, and when they move on, will be worth something to another team. So there's transfer fees there that are payable. There's hospitality, of course, that's very important on match days and other days. And it's about sweating the asset. So if you've got a stand, a stadium, and it's empty other than when there's a home match, that's an asset that's not being used. So the more use you can get, so opening up creches and nurseries or letting out areas of the facility, maybe having sort of working spaces so people can come in and remote work, also allows income to be generated. So it's about thinking about how you can use your asset. So pitch hire for visiting clubs or other teams in to train on is another way. Retail sales is another. So stock of kit is a good fee generator. But the other way as well is, of course, season tickets, because at the heart of every club, it's their season ticket holders that make the club. It makes the environment and the atmosphere each week. And that's what it's about. Grassroots football is about spectators coming to enjoy and watch a game.
Yeah, absolutely. And then to get into kind of the nitty-gritty of the accounting, one of my accounting colleagues at SIFT really wanted to know how you group the different cost centers, what is grouped together, like in the hospitality industry. I know you have food and beverages separated out from, say, hotel guests. So she really wanted to know how do you separate those cost centers for clubs?
So we look at the individual activities. So we look at the management structure. How does the club actually operate? Who are the key people, or what are the key roles within the organisation? What responsibilities do they have? So that effectively defines their budgetary area, and then you build the budget to that job role effectively. So the more people you have undertaking job roles that have a specific spend or a specific income responsibility, that becomes a cost centre or a profit centre or a department. So you might have people responsible for bringing in sponsorship, so generating income. So there'll be costs attached to generating that income. But you also want to measure how much income they're bringing in, because if you don't measure that, you don't know how successful they're being. So that might be one department. You might also want to look at your outreach, because that effectively is a cost, but it has a community benefit. If you're going out to local schools or bringing in children at half term, for example, and running camps, that's not necessarily going to generate a lot of income. It's going to generate goodwill. It's going to generate community involvement in your club. So yes, there's a cost, but there's a benefit that's not quantifiable in terms of money, but it's quantifiable in terms of corporate responsibility, for example.
Yes. Okay, interesting. This was another question that she asked me to ask you. Does the cost of sales follow the revenue based on the activity, or is it more of a kind of blanket allocation?
The problem with a blanket allocation is that it can mask what's actually happening. So if you just work on a straight percentage across the departments, then you're not that it could be that actually there's an underspend or an overspend, or something that's actually happening within that department you won't see on a mass allocation. So as far as possible, we try and allocate everything to a specific department so that you can get quite an accurate view of what's going on there. And it also means then that when you can see trends, so you can chart trends, you can see if something is out of line.
Yes.
Suddenly there's a big spike or a big drop. If you had a mass allocation, that could be hidden. So as far as possible, it's not necessarily revenue based, it is activity based. Yeah, it's more what's the activity that created that cost, and then allocate it to the appropriate department or cost center.
Right. Then on to something more fun, I guess. What was your most, if you can think of one, memorable or maybe one of your most rewarding experiences working with clients in this industry?
A couple actually. So streamlining the processes and getting the opportunity to free people up from data input and processing of data, and actually give them the opportunity to do what humans are good at, which is analysing data and interpreting data. So yes, we can analyze data and the computer will tell us X, Y, Z, but the computer's not necessarily, although AI is getting better at it, it's not necessarily going to tell us the reasons why or know the backstory. So the numbers really are just the start. It's what the numbers and the trends, the numbers in absolute terms, but the trends and the feel and the experience of what's actually happening on the ground, bringing that together, which is the human touch, to understand figures, gives so much more insight and so much more information to management to empower them to make better decisions. So that's sort of a key sort of thing that I've really enjoyed. And doing so, I think you also help the fans to get the best value for money out of their investment in the club, because when you've got empowered management, when you've got management that really know what's going on and understand their business really, really well, then they can focus on the playing act side of things. So, if they know that the finances are under control, then if the manager's not performing, then they can take their action there. But if they're having to worry about, have we got the money to pay the wages bill next week, they're not going to be looking at what's happening on the field in as much detail. So it frees them as well. So if they've got information that they can understand, that they can trust, that's reliable, that's informed, then that's got to be so much better for everyone.
No, definitely. It becomes a complete win-win. They're not stressing over their finances. They're able to actually focus on what their main job is and giving a great experience to all of their fans. So I think that's really fantastic.
And investors in football clubs are passionate about football. So they want to be seeing their teams do well. And yes, so everything we can do to help them with that has got to be a bonus.
I guess it's probably time for us to start wrapping up. Is there anything that you would like people, if there was one thing that they take away from today's episode, what would you like that to be?
I think that the role of the accountant is changing. Historically, we've been bean counters. We've just recorded transactions. We've not thought about the impact of those figures and what those figures are telling us. And I think in order to stay competitive going forward, we've got to be more proactive. We've got to be able to provide our clients with the information they need. We've got to give them the tools they need to make those insightful business decisions and make the right decisions. And we've got to also be able to advise them on how to streamline things. So we've got to be ahead of the technology. We've got to understand it so that we can help them implement it. We are effectively the bank managers of yesterday, the go-to person. So we also need to be building our networks and make sure we're connected with the right people that we can bring in to help when it's needed.
Yeah, I completely agree. I think it's all about staying up to date with the latest things that you can be doing, looking towards the future of what you might be able to do, tomorrow, and staying on top of that real-time data. Absolutely.
And SIFT is a huge help in that.
Love to end off with a SIFT.
It's been a game changer. It's a game changer.
Thank you so much for joining me today, Liz. It was really interesting diving into the world of accounting for football clubs and also your experience of working with tech and changing ideas of being an accountant. So really appreciate you taking the time.
Thank you for having me.
And thank you everyone for watching.
Thanks for tuning in to the Beyond Insights podcast.
Please like and subscribe on whatever platform you're listening to right now.
And please share with any of your colleagues or friends or family members that you think might benefit from listening to this podcast.
That's all from us. Until next time, see you then.